From Bordeaux to bust, is it good to speculate on wine, or would you be better just drinking your investment? I'm joined by James Miles, Managing Director of LIV EX, the fine wine market, to find out. Well, James, putting aside the fact that it's long been considered vulgar to profit on wine in certain traditional circles, what's the link between wine and speculation?
We're really talking about the top wines in Bordeaux, and again, there's there's almost 1,000 years of history of Bordeaux winemaking. The British have been the biggest buyers of Bordeaux wines for 800 years. Modern brands like Chateau Haut-Brion were first recorded in Charles II's cellar in 1660, so we're talking about a 300-year history. And I think speculation has played an important role in helping producers to finance their crop, provide some kind of reward to whoever it was who's prepared to buy the crop before it was actually ready to drink.
And how has the wine market evolved over the past few decades?
The big difference between now and 20, 30 years ago, say, is that the market's become much more approachable, and that's partially down to wine critics. The other important development has clearly been the internet, which has made pricing and all sorts of other information about wine so much more approachable.
Do the prices of wine follow a boom-bust cycle like other markets?
Yeah, I think very, very definitely. I mean, I think if you look back over certainly the last 50 or 60 years, there's a pretty predictable boom-bust cycle every 10 years or so. In the Second World War, for example, during Nazi occupation of the wine region of France, Bordeaux wines increased about 7 times in price, only to fall back 50% once at the end of the war. And in the 1970s, between 1970 and 72, prices increased 4 times for young Bordeaux, only to fall back to 1970 levels in 1974. But in the most recent cycle, between say 2005 and 2011, wine prices for the very top wines, the first grade, increased about 4 times. They've fallen about 40% since the peak. So in a historical context, the recent boom and bust is pretty similar to those we've seen in the past.
So in terms of an asset, how does wine rank?
Well, despite all this sort of volatility and boom and bust, actually over a very long period of time, it's proved to be pretty reliable investment. And there's some recent academic research which suggests that in real terms, wine has returned about 4.1% between 1900 and 2012. So just a bit behind equities, but certainly better than bonds and things like stamps and art. I mean, our LIV EX Fine Wine Investables Index shows nominal returns of about 11% over the last 25 years. So actually, that's a better return than you've seen from UK equities or property.
And in investment terms, where are the areas and chateaux to look towards?
Well, it still is predominantly a Bordeaux market in investment terms. There are other regions in France, Burgundy and Champagne, where there are wines that are investable, but they tend to be fewer in number and lower production. And overseas, there are a few wines in the United States like Harlan Estates or Screaming Eagle or Opus One, which probably are investable. And in Australia, there's Penfolds Grange, and in Spain, Vega Sicilia. That there are, smaller numbers and smaller quantities. Bordeaux is unique in the sense that they're making large quantities of wine. There's a long history of speculation and data, and they're making large quantities at high prices. So it's a relatively, to excuse the pun, much more liquid market than many other wine regions.
Well, obviously harvests are hugely affected by environmental forces.
Yes.
So do prices of a bad vintage, do they still sort of make a lot of money if there's not that much out there?
It tends to be sort of pretty much all or nothing at our end of the market, because you've always got to take into account you've got 10 or 20 vintages to select. So if you're going to buy the new vintage, there's got to be deemed to be some kind of advantage to buying it today rather than waiting till tomorrow.
So let's look at now the wines coming out of emerging markets such as China.
Yes.
What's the wines like coming out of there, and are they worth buying?
The simple answer is it's still very, very early days. I mean, funnily enough, there is a history of winemaking in China that goes back several hundred years. Sort of German missionaries planted vines and that sort of thing. But most of the domestic production in China is consumed in China. It'll be some time before any Chinese wines is deemed to be a fine wine.
Where do you stand on investing in New World wines then?
The vast majority of Australian or South American or Californian wines are actually everyday drinking type wines. They're not really appropriate for investment.
So finally, 2015, a good year for wine?
I hope so. We've had 4 years of falling prices. This year does actually feel better. We've seen a pickup in prices since last summer. Prices are up for the top wines about 8%. We're certainly seeing volumes on our platform increase, activity on our platform increase. There's some tentative optimism about the 2014 vintage, which we're just starting to think about selling now. It's a good vintage. We're expecting prices to be reasonable. So there's some optimism about that. As far as the 2015 vintage is concerned for French wine, it's still a bit early. I mean, they're just, you know, it's early spring, just starting to show a bit of leaf, but it's a bit early to know whether this vintage is going to be a great vintage. But certainly the environment for investment does look interesting. Wine prices are at 4-year lows at a time when bonds and equities are trading at record highs. So I think in relative terms, wine does look really interesting.